Ethan Penner, publicly traded REITs have not offered investors a great return so far this year. The IYR, which is the ETF that tracks REITs, is down around 3% so far. So what's your outlook for real estate, public or private, in 2016?
Well, Greg, I think that REITs have performed poorly this year because of the fears associated with rising rates and the belief that REITs operate a lot like fixed income. They pay a dividend that's not that bad. And so their price depreciation has been actually quite severe at times this year, although there was some recovery off the lows. I think that you need to decouple private versus public, right? The public market trades in its own way, and it really has very little to do with the price action in the private market, which has not seen a downturn at all, really, throughout most of this year. I think 2016 for real estate is going to still be a very strong year. I think that's true for a couple of reasons, but primarily because I think we're going to remain in a very benign monetary policy environment where rates will remain very low, and I think real estate will perform quite well.
So despite the fact that we're all expecting the Fed to raise rates fairly soon, you don't think that will affect the way you invest at Mosaic?
No, not at all. I mean, I think that this whole hullabaloo about a 25 basis point increase in Fed funds is really a non-event, and I think that it will have very little, if any, impact on anything, including real estate.
So what are your favorite areas within real estate right now? Do you like commercial? Do you like retail within commercial? Multi-apartments? What do you like?
Well, it's a good question, and I think it really talks to the underlying issue that real estate is a very local business, and it's also very property specific. And people tend to ask me all the time, am I bullish or bearish on real estate? And it's like saying, it's too broad. There's no business in the US called real estate. A shopping center in Cleveland has very little to do with a high-rise condominium in Manhattan. And so real estate performs very different, one product and even one asset, and certainly one market to the next. I think that I like the residential area still. I think it's very solid. The high end in Manhattan perhaps notwithstanding. I think that I like things that are less tied to economic vibrancy. I don't see our economy taking off. I don't see the global economy taking off, and so I wouldn't be as sanguine about things like office buildings in CBD areas. I would be not as sanguine on high-end malls, where those are asset classes that tend to perform very well in strong economic times and perhaps less well in less strong times.
How liquid are the investments that you get into? Because during the financial crisis, that was a big thing. People wanted to get their money out of hedge funds, wanted to get their money out of real estate. They weren't able to do it. So can you talk about liquidity and real estate investing?
Well, the concept of liquidity, Greg, is probably, I think, one of the most broadly misunderstood concepts, and it's where most mistakes are made. So I think we have to ask ourselves, when we think about liquidity and our need or desire for liquidity, what is the purpose of liquidity? In my mind, liquidity is there to pay bills, right? And you can't pay bills with stocks, bonds, or real estate. You have to pay it with actual cash, okay? And when we think of liquidity and we ask ourselves, is this liquid or is this not, we tend to ask the question, is it cash or can it be converted into cash fairly quickly? But what we don't ask is, what is the cost of converting it into cash, right? So it's true that you can pick up the phone and get a bid in most markets, even in very turbulent markets, for most good quality stocks or bonds. But the reality is that the cost of that liquidity is so high during turbulent periods that it renders those assets truly illiquid. So if you look at like the last 3 or 4 major downturns, the S&P 500 and major stocks like ExxonMobil and Apple dived 50% from their previous highs. That's a steep price to pay for liquidity. And I think in real estate, some of the better property types, like apartments in Santa Monica, California, did not fall as steeply as 50%, far less. And so one might say that an apartment in Santa Monica was actually more liquid in the last downturn than any of the stocks that we talked about. So liquidity is a very misunderstood concept. I tell people all the time, Greg, budget for a 2 or 3 year downturn with cash and treasuries, and nothing else is truly liquid without a steep price.
And then finally, let's stay on the coast, since you mentioned Santa Monica. You also mentioned New York. Because the dollar is really appreciated versus foreign currencies, what does that mean for bids in Miami, in New York, in California? Are you going to see as many foreign buyers propping up the market?
There's no question that the markets, specifically Miami and New York, have benefited from a tremendous amount of foreign influx of capital, and Los Angeles and San Francisco too. That's flight capital. They're not trying to arbitrage currency differences. They're actual wealthy people trying to migrate their wealth out of the countries that they perceive to be perhaps less safe for long-term savings of value. And I don't think small moves in currency is going to change that too much, although there's definitely been a slowing down in Miami and in New York on the highest end, less so perhaps on the West Coast for the time being. I think that pause is meaningful, and I think it's in response to price appreciation that's been unbelievably fast and steep. I think that ultimately, though, that flight capital will continue. I think that we may see a small correction in valuations on the ultra high end because I think things have gotten kind of crazy. But I wouldn't worry about, I think flight capital into the United States, it's one of the things that has kept our economy relatively strong in a very difficult global economy, and I would imagine that will continue.
All right, well, thanks a lot, Ethan.
Great, good to be with you.
And thank you for watching The Street.